Hello ladies and gentlemen, and welcome to the True Potential commentary on our True Potential portfolios. So before we start, what I'd like to do is inform you of a milestone. So we've now gone through the £2 billion barrier of money received into the True Potential portfolios. And for me personally, I've never seen so much money come into an investment product so quickly. So let's just take a step back and think about why is this? So the first reason is that clients can see the benefits of advanced diversification, taking diversification to a new level not seen elsewhere in the marketplace, and that is diversification around fund manager style, reducing down that single fund manager risk. Next, the portfolios now have more of a track record. We now have 17 months worth of performance for the portfolios, and the underlying funds that make up the models now all have at least 3 years. And more importantly, that track record is excellent. Okay, so let's move on, and I want to discuss now the performance of the portfolios. What kind of changes have we been making during February? And then look at what are the key themes that we're seeing from the fund manager partners we work with. Okay, so let's start off by looking at the month of February. And you can see performance has been strong with both equity and bond markets having performed well. Over the longer term, since we launched on the 1st of October 2015, figures are excellent with investors being rewarded for taking risk. So as you will know, we speak to our fund manager partners at least monthly, and what we're doing here is we're looking for any short-term key themes, and then what we can do is we can tilt our portfolios to take advantage of them. I think I speak to a lot of advisors all the time at the moment, and actually one of the things that they're saying to me right now is that they feel that markets are pricing on high valuations. Thing is, the True Potential portfolios, the way they're invested, it's multi-asset portfolios, so there will always be pockets of value. They aren't just invested into one geographical area. And two areas that our manager partners feel look interesting right now are Europe and Japan. Okay, so starting with Europe, our fund manager partners perceive this area to offer the attractive prospect of higher returns. Relative to the US, equity valuations are much lower, and European company earnings are benefiting from what is a relatively weak currency. Political uncertainty in Europe remains high, but managers view dislocation from political fallout as actually a buying opportunity. I think the other area that looks good value right now for many of our fund manager partners is Japan. So Japanese equities are appealing to some of the managers. That's because they're attracted by low price to book values and favourable corporate debt levels. Also looking at a higher level, accommodative monetary policy and political stability. Okay, so let's move on and let's take a look at the trades, the movements in positions that have been taking place during February. So rebalances have been placed for the Balance Plus portfolio. So within Balance Plus, what we've done is we have added to the True Potential Schroder Cautious Fund. And we've done that to help increase diversification and also to reduce model exposure towards bonds and also increase exposure towards cash. Within equities, Schroders select funds with a value bias, and they also identify funds with alternative strategies, and this is what really helps with that diversification. The True Potential SCI Cautious Fund was reduced, and that was due to SCI's exposure to global minimum volatility equities. And this is an area that has seen huge inflows during 2016. But again, it's increasingly associated with bond proxies, which correlate with bond price movements. Okay, so let's look at the rest of the True Potential portfolio range. And allocations have been kept the same. The key thing here is the optimization of our 4 factors that continues to be paramount within the portfolios. So just as a conclusion, the investment landscape continually evolves and investors must judge where best to place their hard-earned money. At True Potential, we use advanced diversification, confident that our manager partners will provide a good outcome as markets evolve. Our framework of looking to optimize risk, cost, long-term expected return and risk-adjusted return allows True Potential to align the portfolios to client interests. Thank you very much.